All right, Quasar Markets Live. You asked for him, Todd Bubba Horwitz, man. 40 years of trading, and you've been in the forefront of all of these markets, and you've seen it all. And it's interesting to me, Todd, and welcome to the show, is that it seems like there's a lot of more retailers that are playing the game than even back during COVID, because it seems to me that the CME is saying, hey, you playing the silver market, we're going to raise up your initial and your margins, and we all know how that works, Todd, from Chicago, right? So hey, what's going on in these markets right now?
Big Beat, the man in the street, what's up? I tell you, the margin raising is always a pure sign that a market run may be coming close to an end. That is the exchange's way, the brokerage house's way of showing a little panic. So they raise rates, they raise margins so that people cannot participate as much. It's always an issue. It's been that way. And typically that does signal a short-term end to that market. Now, we haven't seen the short-term end yet in the silver markets. They're still pretty wild, as you said, that you've been trading them a little bit to the short side, which has been a pretty solid trade once they rally up. I mean, they almost hit 90 today before coming back down. But anytime the firms and the exchanges get involved and start changing margins, that means, as Billy Ray Valentine said in Trading Places, they panicking out there, and they're trying to prevent you from trading.
That's right. I think that's part of the thing, is that, when you have this much paper on this much commodity, there's always a bigger player out there. And I think that, I saw the new numbers from the institutions. They took 0 contracts for delivery meaning they want the silver. They don't want it at this price. They just don't want it, right? They're trying to dump the silver, right?
They are dumping silver, and of course this has been their out. They've accumulated, and now they're taking away, and probably they'll start to look to short it as well. I mean, we know that if you're holding the physical metal, that you don't mind being short the futures because you can hold on to the physical, and then they don't want to take delivery. This is a same old story. We've seen it happen many times before in many different products, including crude oil, if you remember back during COVID.
We went negative. And nobody wanted to take delivery of it, and they couldn't even get rid of oil. I mean, that's crazy. Today we don't think about that, right? But you're absolutely right. And I think a lot of the retail players just don't understand how the game actually works. Oh, and then they get mad. Oh, it's rigged. It's not rigged. It's how we do it. It's how it's been played since we started these exchanges. Is to keep them liquid, right? So that we can actually trade. All right, let's get to it. Trump. Yeah, let's talk about it. I mean, Iran. Let's talk about Ukraine. Let's talk about China. Let's talk about Japan. Let's talk about, my God, where does it stop? But the world is burning, and yet the markets continue to make new highs. Something's got to give, right?
Well, I mean, something will give at some point. But remember, Big B, we got no action. We have no volume in this market. This is, you've heard the story 1,000 times. Dull markets are going to drift higher because we know that the market predisposition, no matter what we think, no matter what the fundamentals are, no matter what goes on, if nothing's going on and there's no volume, the markets are going to drift higher because there's always new money flowing in from pension funds, from retirement accounts to the long side. So we have very light volume. I mean, the volume that we've been watching, especially the last week, is less than holiday volume. So you're going to see a drift. It doesn't matter what's going on in the economy. It doesn't matter that inflation is going through the roof. It doesn't matter that government debt is going even higher than the roof. And of course, how do we know that? Look at the price of gold and silver. The precious metals are telling you that inflation is out of control. The Fed wanting to cut rates is a joke, because when would you ever think that a Federal Reserve would cut rates into a market that's at an all-time high? Okay.
Yeah.
And the consumer has not benefited from the rate cuts, because if we go back to the first rate cut, which is September, the 10-year notes were 3.99 in September. Today, the 10-year notes are 4.2.
That's right.
So where's the cut for the consumer? Remember, the Fed rate cut is not.
These banks are sticking in their pocket, Todd.
The banks are taking the money.
When people go, oh, we need to cut. I say all the time, we need to cut rates. Yes, but we need to cut rates and pass it on to car loans, pass it on to the consumer through houses. And they're not doing that because the banks are like, well, you wait a minute. Wait a minute here. I kind of like
this. The only benefactor is the banks. The banks get to take all the money. And what a business model, Big B. You got a business that you can lend out as much as you want. You can violate all the rules because you're only supposed to be able to lend out 10 times to one, but we know that they're over leveraged.
That ain't happening. We know that.
But if you go broke, You got the Federal Reserve and the American taxpayer to bail you
Too
out.
big to fail. I agree. I agree. You know, it's terrible. But then at the same time, you've got a president who's screaming and hollering that we got to lower rates. The Fed's got to lower rates. We're screaming and hollering that he's either incompetent or he's crooked, was the words that he used today. Powell isn't that, right? I mean, Powell's actually a good guy. Talk to me a little bit about.
I don't like Powell. Listen, I got nothing against him except that he came from the private industry, and I thought he understood our business. And the minute that he came the chair, the Fed chair, he became an instant moron when it came to handling things. Okay, again, right. I get nothing against him. I don't think we should be cutting rates. I think President Trump is wrong. I don't think that that's the right way to go about it. See, here's the problem that we've lost, Steve, over the last 50 years. We keep taking away from what the free market system is. Okay, Alan Greenspan started this of destroying the true free market. Interest rates, market should be decided by supply and demand. That's how we should decide rates. It's the same as Trump saying, well, we're going to put in a max 10% on credit cards. You know that's never going to happen. And the truth of the matter is, if people are stupid enough to want to pay 30% on a credit card, then they should pay it. The free market will determine the asset class price of anything in the world. Anything that takes two sides to a market, the free market will decide if you let it. But when you start playing the game in which they're playing now, you end up in a mess, which is where we're headed, because the only reason Trump wants the rates really cut down is because our debt is so massively high that they want to bring the rate down of our debt service. And that's not going to happen, and that is not the way to do business.
No, I agree, and it also lowers the around the world their belief in the United States if we just mess around and monkey around with our how we service our debt. But you're already seeing China and Japan already dumping most of our treasuries already. What's the next level of this? I mean, it seems to me that when you look at the overall picture of the world looking at the United States, I think they're throwing their hands up and going, WTF, right?
I don't think that, again, one of the big benefits that we have is we owe so much money, okay, that they may dump a little bit as a window dressing type of thing, showing that they're trying to stand up to the United States. But we owe them so much money. They have so much of our debt that if they got a little bit too carried away, we always have the right to devalue. Not that we would do that, but there's always a threat. It's the old story. You owe a bank 5,000, they own you. You owe a bank 5 million, you own that. And we're in the position where we're still in a position of power because we owe so much, and they are so dependent on our debt service and on the money that we have. So that becomes a whole nother area of problems that we could discuss. But overall, they're not going anywhere because their debt is too deep, and we have the power of devaluing currency, and they would really be screwed if we did that.
Yeah, and President Trump just now saying that he is going to get oil prices down even further than they are. We were around $58 a barrel, now back up to 61 with all of the stuff going on around the world, right?
Yeah, I think it's it's what's going on in Iran, it's what happened in Venezuela. But let's be honest about one thing: the economy is not very good, and it's not him bringing the price down of oil. What's bringing down the price of oil is the K-shaped economy that we're in. Okay, if you take our economy, we've got, let's say, 80% has some relationship to fossil fuels, whether it be making plastics, delivery, you're driving your car, whatever, heating. Those are all things that are related directly to fossil fuels.
Yeah.
When the demand is going down and prices are going down, that is telling you that the economy is not in very good shape. And again, we are in a K-shaped economy, which means only the upper 10% are really benefiting. And take a look at the jobs. The jobs are horrible, and the jobs are going away. This is the next story. You've got over 100 companies discussing layoffs, and the layoffs are no longer layoffs. Layoffs are going to be terminations due to AI.
Yeah.
Placing a lot of white-collar jobs through AI. You've already seen it with UPS laying off 48,000 people. Amazon laid off 25,000 right before Christmas, and they want to lay off over the next 4 years. They want to lay off 500,000 people. Those people aren't getting jobs again. So this is the big problem that we have in the economy right now.
And we talk about AI, and it's scaring people in a lot of ways, right? I mean, AI seems to be, I'm using AI on a daily basis. I'm really kind of company this way, right? And it's making my life so much easier. I don't need 20,000 people run my company to work in the company anymore. AI is working for that. Should these kids that are going to school now, should they be worried about AI? Should they be worried about looking for another job, different place?
Well, they better either learn a trade, okay, because tradesmen aren't going to be fixed by AI, right? The plumber is not going to fix your AI, your toilet, but they either better learn the technology that they're going to need, or they better learn a trade, because it looks like there's not a lot of stuff in between anymore, right? I mean, we're going to this direction, which unfortunately, look, I'm old, so it's not going to affect me, but people that are in their 20s and 30s now, this could have a very big effect on them. And again, the jobs we're going to be losing is to me is problematic. Okay.
Yeah, and my wife was telling me that, you know, this family that she knows, they just retired this week, and they had to get health insurance because they're off their health insurance. $2,200 a month for retirees. Retirees can't pay $2,200 a month, right?
No, but I'm on Medicare, so I'm okay.
Yeah, right. Yeah, you're fine.
No, it's very expensive. Listen, we have a very bad healthcare system in this country, and that is due to President Obama. That is Obamacare. This is the thing we're running. We haven't fixed it. Now, I've heard President Trump say he's going to fix it, but it isn't fixed yet. We have a very bad system. And of course, it's so bad that our Congress and Senate don't use Obamacare. They use private insurance. And I will tell you this, insurance was so much better when it was in the hands of private than it is in the hands of government. And as most things are, because government doesn't create money, they create debt. And of course, they have the American taxpayer to pay off the debt. And it needs to be fixed, because no, you can't afford, if you're retiring, unless you've made a lot of money and put a lot of money away, it's hard to spend that $2,200, considering that if you're on Social Security, you're getting about $3,000 or $4,000 a month. So you can't be putting 60% of your income to health insurance.
Yeah, and as you said, that Trump just said the Fed chief should cut rates on good news. He's not even calling him by Powell name. He's not even naming his name anymore. He's kind of just ignoring him as a person.
Look, you know that I'm a Trump fan, but I will say what I say, and I think he's wrong. I think he's out of line when it comes to this, because this is not benefiting anybody. Okay, right. This creates too much inflation. It creates too much cost. It's not helping our farmers. Our farmers are getting destroyed. You can see what's going on with the grain prices. And the biggest problem, we are so close to being in stagflation, and nobody wins in stagflation.
Yeah, I've been talking about stagflation now for a while, and I think people have been saying, "What the heck are you talking about? There's no way that's happening." And I'm going to talk about what Todd is talking about right now with it. I'm going to pull this up, this chart of corn. Actually, I think it's important that people see this. What is Todd talking about? And corn prices fell out of bed. That is a term we use in Chicago. Fell out of bed. There it is. There it is. I mean, this is a daily chart. I'm going to pull up like a 1 hour chart of corn, and there you go, man. I mean, this thing is just collapsing. If you look at cattle, same thing, right? Softs, as we call it, or ags, are right now really collapsing all over. So farmers are really hurting. If we look at cattle prices, I think he's also some of the same thing.
Well, cattle is very high, but there's a shortage of production. But
right.
Let's look at it this way, Steve. The farmers right now, we're going into planting season again right now. We're just getting ready to get started. You know, a lot of farmers that don't do livestock, they've been off for the last month and a half or so, preparing, putting together a business plan, getting everything ready for the new planting season, which will start here in February. Okay. Now, they're going to be planting, if they plant now and choose to plant, they're going to be planting at a loss. Okay. So not only are the farmers going to they pay more interest rates, if you get a loan at 8%, they're paying 11 or 12, okay, because they're risk capital. They're going to be planting at a loss based on what their input costs are. So these prices are dangerous, and some farmers may choose not to plant. Okay, that's the damage we run and the danger we run into because of what's going on, because of this pricing. It becomes a problem. And you want to talk about the overall stagflation term that goes along with this. You've already started to see it with the jobs. Jobs have gone away. Now, we can look at the rate that they just came out with on Friday, but that does not count the lack of participation, because people who stop claiming for unemployment, they drop off the roll, so they're not really counted. Although the unemployment number was 4.5%, the true number is about 7%.
Yeah.
And getting worse.
I'm going to pull up that too as well. I think what Todd here is referring to, and I will bring that chart up, is what they call U6. I will show what he's talking about.
U6 is 6 months instead of the ridiculous one they use, which is U3.
That's right. What Todd's talking about is all people that are marginally attached to labor force. That means people who have actually stopped actually looking for a job as well. So it's not just numbers, and that U6 is ticking up too. Now we're more closer to 8.4, and we haven't seen those kind of numbers. I mean, you got to go back to 2016, and what Todd is talking about, the last big sell-off of the market happened in 2008. That would be the dot-com bubble, and you can see 8.4, 8.5, 8.6, and guess where we're at? 8.4. So Todd is telling you the truth, folks. He's telling you that what's happening here is not really being in the markets normally that we normally see. So, yeah, I agree with you, Todd. And stagflation is something I've been talking about. And for those of you who don't know, that's when inflation goes up. Jobs are nowhere to be seen. And what we're seeing now, which is the worst way to be, right? Prices go up and nobody has money to pay for that.
Prices go up, no jobs available. The only people it's really good for is if you have a lot of money, because if you remember the Jimmy Carter era, interest rates, CD rates were like 13%. Okay. But for the average American, it is a disaster. No jobs, high prices. Okay.
And Trump just said, just 2 seconds ago, Trump says boosting 401ks savings is a top priority for me. The savings rate in the United States is pretty low right now. I don't disagree with him on this, but the problem that I have with this statement is that it's the K economy again. The people that are investing, are not the ones getting hurt here, right?
No, the people that are getting hurt are the masses, the majority that don't have the money to put away anyways. Right. If he really wanted to fix the economy and really wanted to make it fair for everybody, he would not allow the Fed to cut rates. He would get a handle on this inflation that is way too high. Okay. I mean, you go out to dinner. You and I went out to dinner.
Yeah.
4 people for dinner was $700. I mean, how many people can go out for dinner? Okay. And you go to the grocery store. It's not cheap for an average family.
Right.
To live in this country today, it's very expensive. Right. And especially if you live in a major metropolitan area like Chicago, New York, or California, in those states, if you're not making $150,000 a year, you're living in poverty.
That's right.
And I think that you really want to fix what's wrong and what ails the country, you got to lower inflation. The only way you can do that is let the free markets trade and let the interest rates go where they're supposed to be, because they should be higher.
That's Trump just now saying to be anti-tariff is to be pro-Chinese. You agree with that?
The anti-tariff, I am not pro-Chinese, so and I'm not against the tariffs. I think China's an enemy. I don't think they're a friend. I don't think they're anything. I'm personally in favor of the tariffs. I don't think the tariffs have done any real damage. I think, again, this goes back to, this is the old conundrum, Steve. When you talk about, everybody says the dollar is too strong, it's not good for my exporting. Well, look, if the dollar is cheaper, that means your buying power here goes less. If you get a strong dollar and you want to move your goods, lower your prices. I mean, it doesn't make sense that I should be rooting for a weaker dollar so that I can export more goods. Because I'm really not exporting, I'm doing nothing.
My question is not about a stronger dollar or a weaker dollar. I think it should be a less volatile dollar. That's what I'm more concerned about. I want to see a dollar that's strong, stays the same, and this is what it is for long. I mean, it just seems about the volatility and the chaos in this market is a little out of whack for me.
Well, I think you can blame that on the central banking system, not just the Federal Reserve, not just the United States. Let's face it. The minute we went off the gold standard in the 70s, Bretton Woods Act, and the rest of the country, we became this big fiat currency system where the currencies traded against each other. Okay. We became a manipulated, air-filled garbage of where the central banks could take their turns at devaluing their own currency and actually making your spending power less. And to give you a perfect example, in 1985, the average income was $25,000 a year. The average house was $75,000. Okay. Today, the average income is $70,000. The average house is over $500,000. So we went from 3 times annual income to over 7 times annual income. Not a good situation. And that is all based on and through that manipulation and that the central banking playing with the fiat currency system, which to me, in my eyes, The fiat currency system is a total criminal outlook anyways, which is why I'm not a big fan of the Fed, which is why I'm a bigger fan of the crypto world, because, again, it's a free market that's open 24 hours a day, 7 days a week.
Yeah, and you talk about it from the perspective of the K economy and the savings rate. Well, I was so excited during COVID that the savings rate went to 31%, 32%. People were just piling money away. And the second level that COVID hit again at 19 and 26%. Today, that savings rate is now at 4%. I mean, it hasn't. The last time it was this low, you have to look at it back at again. There it is, 2000, and right after .com era.
Well, people can't afford it. They don't have any money.
All right. They're
not making enough.
Is that what Trump is saying? Like, look, I'm going to beef up the 401k so that you will
you can beef it up, but the problem. Listen, I'm a big fan of putting away for 401k. I'm a big fan of retirement savings. I hope every young person out there watching us is saying, I'm putting away the maximum I can every year. I'll give up one day at Starbucks. I'll give up one day at the bar because I want to make sure I put that money away.
Yes.
Okay? But when you don't allow people to make any money, and especially if you're established and have a family, it's hard. So when you do these things that increase inflation and take away out of the people's ability to save, it's hard if you have a family to put away and put it in your 401k. Okay,
yeah.
Your 401k, no, but an IRA account, because not everybody has a 401k.
But what do you say to people who say, like myself, that there's a lost economy here in these kids coming up in this time period between my time and maybe 10, 20 years behind me? This is like almost a lost period where they're not making nearly as much money, but they're not working as hard as I've been saying. And they, this economy, they're unhappy because they can't buy a home. They're unhappy because they can't be a part of the quote American dream. What do you say to those people that are coming up that those saying, hey, you know what, there's a lost economy here?
Well, one of the problems is, of course, we as parents, it had a lot to do with raising people that didn't want to work as hard. Okay. You worked hard your whole life. I worked hard my whole life. I'm very fortunate. Both my kids work very hard, but in general, a lot of people are lazy. They want everything. We've gotten in this government that has so many handouts that people don't want to work. And again, I think that's the other big mistake that we make is we are too in favor of getting something for nothing versus actually going out and working for it. And you and I both know, I mean, you work probably 60, 70 hours a week. Okay. Why? Because you want to build something, because you want to do something.
Right.
People don't have we haven't instilled the same desire. So a lot of the stuff for the youth is on them because they don't want to work as hard. They want to go out and spend money on that credit card. They want to build that big credit card debt. And eventually, you and I both know, eventually it catches up to you.
Yeah, but if you lower it to 10%, I think it'll be less of a savings rate. You're going to have more people spending more money on their credit cards. But I think the banks don't have the money to lend it out, right?
Well, the banks have it because they're being paid not to lend it out. But they're
not going to lend it. They're going to be like, okay, well, all right, fine. You don't have a job, great. We're not going to give you any money.
Your credit score for nothing. Right. All you got to do is make a phone call.
That's right. I agree with you. This could really backfire.
Is this not the same type of setup as you saw in 2006 and 7 and 8?
That's what we're talking about now.
I'm not saying that we're going to get there, and I'm not saying it's tomorrow. But you watch in the 06, 07, first you had the 0% financing on cars, enticing people to buy new cars. Right. You got that again now. It's back strong. Now you have credit card companies saying no payments until 2027 or maybe 2028. Now, you and I both know that what that really means is they want to suck you in now, let you buy something today that you won't be able to pay for a year from now. But the interest rate at 28 or 27 or 29% will regenerate all the way back to today. Yeah. And it'll be clicking for a year. So by the time you get that $1,000 TV or whatever it was that you had to buy today, because you have to pay for it today, you'll be paying $2,000 or $2,500 for the TV if you can pay it off then. And it doesn't work that way. But that's the other problem with our banking system. Our banks are criminals because at the end of the day, they can lend out whatever they want. They can give people who don't deserve the money because at the end of the day, when they go bust and they got to have that private meeting, and Paulson, in this case, it would be Powell, but when Paulson came out in 2008 and said, our banks are safe and sound in September, by October, they weren't safe and sound anymore. So we're going to get that speech again, and you know that'll be the beginning of the end.
Yeah, and it's interesting. I mean, Kramer said everything's fine again yesterday, and this morning he said it again. And when you talk about it from that perspective, then all of a sudden you think about those days back in Shearson and Lehman when they went under, and the banks are fine, and then it fell under. I think there's an underlying problem here. I have been saying this for a while. Why are we talking about all of these different situations if things are fine? I just had Trump just say this a few seconds ago. He said challengers at the Supreme Court are China-centric, and he said we'll figure something out if we don't win the tariff case. He's saying that because I think he thinks he's going to lose the case.
Well, again, our whole court system in this country is a little wacko to begin with, right? I mean, again, we got a lot of things that are kind
but
of.
But it's his people, though. He has the majority of the court.
People, some are not. I get it. I'm not picking on either side. I'm just saying, in general, a lot of the rulings that come down don't always make a lot of sense, right? No matter which side. It doesn't matter. It doesn't matter which side you sit. It's just we aren't working under a way of a true free market, a true free constitution. We've gotten so far away from what our forefathers were looking for. Okay. We were in such much better shape when the farmers ran the country, and they'd come in and do their 1 or 2 terms, and they'd go back to work on the farm. Okay. Instead of having the lifetime achievement awards of our politicians, whatever side of the aisle you sit on, you got crooks on both sides that have been there almost their entire lives, stealing to their heart's content.
I won't go the conspiracy theory route with you, but I will say that, things have changed over the last 250 years, right? I mean, we are no longer a farming country. We are, food is plentiful in this country. We're no longer a manufacturing country. Manufacturing is fairly plentiful in this country. We are a service country that, we believe in service, and it's what we do in movies. And our biggest export still is movies. Most people don't know that. But
if we farm out all our services.
Yeah, that's true. We farm out. Well, that's what Trump is trying to change, right? With this investment into producing more chips, and I agree with that. But if I were to go the next level of this, and thinking that we're not going to be a manufacturing company, thinking that we're not going to be a services country, what kind of country are we going to be? I mean, I think that's what the problem is, that when you look at these kids coming up, they're confused as to, well, what do I go into? Do I go into what mom and dad went into? No, because what mom and dad did is gone. What do I go into next? They don't know, because AI is going to take it, right? So the question to them has to be asked, okay, inflation's still rearing its ugly head. Unemployment is starting to tick up pretty high for U6, all the things we just talked about. What's next? When you talk about it from the perspective of what do I invest in? We're going to buy silver. Well, silver went through the roof, right? What do you do next, right? And I think that's what a lot of people are asking the questions, Todd, and even I have to ask, what the hell do we do next, right?
Well, I think you have to kind of forecast out and figure out where we're going to be, and we're certainly going to be a technology country. Okay, certainly, obviously, AI is taking over, so certainly management jobs. Lower management is no longer needed. I'm telling you seriously that you're going to have to be either in sales or you're going to have to be in a trade, okay, among other things. But we already seen the destruction of small business, especially small business brick and mortar. Everything is on the internet. I mean, people don't go to the store anymore. They're all closing. All so right. You're going to have to figure out and try to look forward and say, this is where I'm going to have a niche and where I can outperform and be better than somebody else.
But that dystopian view of the world, I mean, we're all going to go to Amazon, buy our products, and we're going to wear Meta's glasses, and someone's going to be shoving data down our throats constantly, telling us what to do and what to buy. There's got to be a world that's better than that, right? So, and we're not seeing that yet, right?
No, I think that, to me, what's going on is making things worse. Okay, yeah. I know it benefits you and what you're doing, but in general, I think we've raised a generation of morons that have no social skills anymore.
Right.
We no longer have, everybody wants to only text. Nobody wants to talk to you anymore. I grew up, somebody sent me a letter, I wrote them back a letter. Somebody made a phone call, I made a phone call. Again, like respond in kind. People don't have the social skills anymore. Can you imagine having people talk to you like this back and forth? You don't have it anymore. because we
Well,
don't.
I think it's what we're doing in our markets for artists, to bring in the real world to people so that they can understand that a little bit better of the world around them, and not what they've been shoved down their throat going, what did I find on Reddit today or what did I see on Twitter, but more or less having that conversation with each other. And I think you're right. And I think we'll come up with better answers than being shoved down our throats in the politicians today.
Well, of course. I listen again. I think we've made a lot of drastic mistakes, and I think we need to fix it. And listen. It starts back all the way to the family unit, and of course, when you have people that can't keep their family together, and I'm not criticizing anybody, but now most families have to have both parents have to work, so you don't really have much family anymore. It's great to work by choice, but again, communication. We don't have communication. People only want to text you. They don't want to pick up the phone and call you. They say, "Oh, I tried to text you." Okay. Again, to me, that's a problem. But maybe I'm wrong. Maybe I'm just old. I can't say that I'm right or I'm wrong. But to me, it comes back to communication and the ability to be out there. And we don't have that. And it's not being created for us. We are continuing to find ways to be alone and to be loners, which creates more depression for more people. Okay. And more problems. That's the way that I look at it. But again, I'm just one guy.
All right. Well, we'll see this one guy back here on Thursday, same time. Todd's going to be here on Tuesdays and Thursdays from now on, folks. And we look forward to seeing you then. Todd, until then, keep the world up, man.
Big beat on the street. Thanks, brother. I appreciate you, man.
Thank you, my man.